Hey guys, welcome to a new educational video. This time we're gonna talk about moving averages and mostly about how I use them because there's countless of ways you can use these and everyone has their personal preference. So I'm just gonna tell you how I'm using them and how I'm treating these during my trading. So first off, we got two different kind of moving averages which are most commonly used. So we have the normal simple moving average, which is literally, in this case, the daily 200 simple moving average, is just the average of the past 100 days of candle closes combined. So it does just counts the candle close. So if you were to count up all the closing prices of the last 200 daily candles and then average them now together, you would come to this price here at, let's say, 63.5K. Then we have the exponential moving average, which the difference there is that it weights the more recent days more. So let's say these past few weeks of trading, these prices have a higher weighting than the prices at the start of the 200 days. So it's still taking account like 200 days back, but these prices are not as highly weighted as the more recent prices. So what you do tend to see is that the exponential moving averages or EMAs are usually a lot more volatile in their movement. So you can see as well, once price started moving up, you can see the blue line, the exponential moving average, tends to move quicker as with the new price going much higher, these prices have a higher weighting, so it's moving up quicker. And then it's also moving down quicker when prices move down. So that's a big difference here. I wouldn't be able to say which one I prefer most because on the higher time frames, I think both have their value. And I think just here you can see a good example of how here recently both have been respected quite well. Do keep in mind the higher time frame, the better these usually work. And also don't zoom in too much. Let's say, for example, here a few days ago, you can see price started trading above the daily 200 moving average. But in the end, the candle did close below, so it got rejected. That's why the candle closes when looking at these moving averages are important. So don't count it as like a breakout or breakdown just yet if it's still trading there and the daily candle hasn't closed in this case. Of course, when you change the time frame, these moving averages are gonna calculate to that time frame. So in this case, they have moved because I went to the 4 hour, and now it's just taking the last 200 4 hour candles. So that's essentially like 6 times less of a time frame it's taking than the daily candles, for example. So that's why it's pretty convenient. You can just have these on your chart, and whenever you move time frames, it will automatically calculate new levels with it. And quickly, in case you're wondering, if you want to add these, simply just go to the indicators on TradingView, type out moving average, and here you can see them. You got the exponential, you got the simple one. Let's say we add the simple one, it's automatically at 9. You can here just change the length, for example, then let's do 100, and you can change the color, etc. here. So now we have a simple moving average of 100. Moving on, a few common things you might have seen thrown around are the dead crosses and the golden crosses. I will start off. I don't like using these at all, as I think they're a lagging indicator. What they indicate, or what they people say they could indicate, is, for example, here. These are generally used with the daily or the 50 and the 200 moving averages. So in this case, the yellow one is 50 and the purple one is 200. So what this would say is that when the 50 crosses to the 200 to the upside, in this case at the green circles, that would be a golden cross, and that would indicate that there's further upside, as it means the short-term moving average crosses the higher time frame moving averages, indicating positive momentum. And on the downside, whenever the 50 crosses the 200 to the downside, which you can see at these red circles, that would indicate there's a bearish trend forming, as then the short-term moving averages crosses the high term, which indicates a bearish trend. But more often than not, especially on Bitcoin. Whenever the cross happens, most of the move has already occurred. Of course, there's these different situations every time, but here you can see as well, for example, here the cross was, and like basically nothing happened anymore. Here, so you got a dead cross right at the bottom before a massive rally. Here, this one would have technically worked, but still, you would have already missed the first 30%. Then the golden cross comes in here. Yes, it kept on trending up, but you can see how it's mostly just a lagging indicator, and usually the bigger part of the move has already occurred whenever the cross happens. So these are commonly thrown around, not as much in crypto anymore as back in the day, but I don't really like using them just for the fact that they are mostly lagging. Another one I do use personally is the 100 moving average, and usually mainly on the daily. As you can see here as well, it's been pretty decent in terms of its accuracy. Yes, there's some deviations above and below, but you can generally see how there's like a lot of these daily candles, and here as well. Sure, it's trading below for a bit, but it's mostly sticking around this level, so I do think it has some value. Alternatively, I do like using the 4-hour 200 MA and EMA. You probably see me tweet about those a lot. And you can see here, especially on ETH, this has been like a pain for ETH more recently. As you can see how all these times I've circled them out, you see the 4-hour 200 MA and EMA as a combination have basically been rejecting price for the past, let's say from this point out, so for the past 4 months or so. Yes, there's some closes above, but for example here, it started trading above, but on the first test, it failed to hold and basically got right back below. Same here, we broke above, didn't test, but on the first test, it held for a bit and then just fell below, and now we're back to rejecting. So until ETH can actually break above these and hold them on a retest, the trend is kind of bearish in the short to midterm. And that's what I use these MAs or moving averages for the most, just to watch or gauge the market momentum and the trend. So if we're trading above like the 4-hour on both of these, it's usually like a decently short to mid time frame momentum up. If we're trading below, it's a downtrend usually. And generally, if you want to focus on longs, it's always a nice added thing if we're trading above these, to indicate there's at least some momentum towards the upside. Then, lastly, and most importantly, yes, these things can be useful. Moving averages can be nice. They can help you gauge the market strength or the trend something is trading in. But it's important to always use them in combination with other things. So whether that be horizontals, Fibonacci retracements, the best results are usually when you combine, not too many of course, but like let's say 2, 3 or 4 indicators or things you watch, combine them together. And especially if there's confluence at a certain level, for example here, we had the top of this channel, we also had the day 200 MA coming in. So I knew this area was going to be a hard one to break through. And in the end, yes, we tested it, but we ended up rejecting. So in this case, you had at least 2 things here, which lined up pretty nicely on a high time frame, and usually that yields some decent results. So that's how I kind of using these moving averages just to help me indicate the strength in the market or in the chart, and also use them as support and resistance levels in confluence with other things. So I hope that might have given you a bit of a better insight on how I use them. You see me tweet about these a lot. I like using them, especially on the daily time frames. And yeah, I mean, hopefully it helps. If there's questions, of course, feel free to ask. And yeah, good luck with applying these if you decide on using them. And see you later. Bye bye.